Hey, Team GCI. Welcome back to our weekly 730-90 analysis, where we take a look at Forex pairs, gold and oil, on behalf of FX Street. So every week, FX Street asks me and some other analysts, including banks, to take a look at the Forex and commodity markets. Again, this is not Forex trading advice. This is strictly for analysis that we do every Friday. To be honest, analyzing on Fridays is not the best way to do it, but that's what they want from us, so we carry on. Okay, so what we do is take a look at a variety of Forex pairs, gold and oil. Again, I'm going to keep saying to you, this is not trading advice. This is simply looking at the charts, looking at the fundamental analysis, and making an educated guess as to what's going to happen 7 days from now, 30 days from now, and 90 days from now. Okay, one quick thing. Next week is Christmas. So I'm going to show you what that means. If we take a look at the economic calendar, we can see that this week was reasonably full of interesting news. If we take a look at next week's calendar, we can see that it's empty. And of course, this is typical of the holiday season. So Monday is Christmas Day. Tuesday is Boxing Day when most of the markets are closed. Then we're going into New Year's. 29th is Friday. So not much is going to happen next week unless there's some major geopolitical events. But there is really no economic news scheduled for next week. So let's take a look at this week and see what happened. So we had quite a lot of good news out of Canada. So we'll take a look at the Canadian dollar as we go through. The Japanese, the Bank of Japan, basically kept their rates steady at minus 0.1%. And if you watched our commentary throughout the week, you'll notice that the price of the yen fell down again and then came back up very quickly, which is a really good way to trade. And I'll show you how to trade those news events in later videos. And we look at the American dollar. We had good news on the consumer confidence. We had good news on unemployment claims and bad news on GDP. If you remember a week ago, or just over a week ago, Jerome Powell was talking about Jerome Powell is the chair of the U.S. Federal Reserve, the central bank of the United States. He was talking about lowering interest rates into next year, which really sent the dollar weaker. Well, it is continuing weaker, and it's really caught a lot of us off guard. As we go through these last week's forecasts, you'll see that quite a lot of us got it wrong, and I'm happy to admit that I got it wrong. We didn't see the U.S. dollar weakness continuing, and it did. And again, next week, not much is going to change because, it's the holidays, it's Christmas. So let's jump straight into it. We don't need the calendar anymore because we know nothing is going to happen next week. All we're concerned with right now is dollar weakness. So if we take a look at the euro dollar weekly chart, and again, I use the weekly charts on this because I'm looking at 1 week, 1 month, and 1 quarter in terms of forecasting. So what we're looking at now, if I take a look at the charts, again, next week, not much is going to happen. So I'm going to consider that the US dollar weakness is going to continue. In fact, if you take a look at the stochastic oscillator here, you can see that it dipped down. So I was fooled by that, but then it started to go back up again. And in fact, MACD is doing the exact same thing. It was looking a little bearish, not too bearish, but the signal line is now heading back up again. So we're getting some bullish indications from our technical indicators. We clearly have a couple of bull candles, 2 green candles over the last 2 weeks. And if we look at our trend line overall from November, from September basically, we saw price trending up. So I guess, and we look at the parabolic SAR is telling us again, everything is turning bullish. So if we consider that price is going to go up a little bit next week, somewhere around here, around the 1.1 range, and if we want to extend this trend out a bit, so let's assume that in 1 month's time, with dollar weakness, price will extend up to around 1.15. But then again, what I have to consider is that analysts and banks believe that the European Central Bank will lower interest rates before the Americans. So what that's going to mean is a fall. So if we're looking at 90 days, we're looking somewhere around here, back to about 1.05, maybe even back to par. We don't know. Again, who knows what's going to happen within the next 90 days to the US and the European economies. Inflation is getting slightly better under control with both economies, so we never know. So we're going by the interest rates on those two countries. So what I'm saying is next week, we're going to have a bit of a rise. In 30 days, even higher, and then 90 days, we're going to bring it back down. Again, this is not trading advice. I'm just going by what I see in my fundamental analysis and my technical analysis. Okay, let's take a look at pound dollar. So we had a sort of a bullish candle last week. Okay, again, looking at dollar weakness and pound weakness, and it's pretty much tied. You can tell by this candlestick pattern, this candle, I should say. It's almost a doji, not much happened. So if I look at the dollar pairs and pound pairs, which I did during the week, they were almost equally weak. And the problem we've got right now in the UK is we have and it's not on the economic calendar, but I just saw a news flash up on Bloomberg that the revised GDP figures, gross domestic product, for the second and third quarters have been revised, and the news wasn't good. So it looks like they're predicting a recession in the UK, even though inflation is coming under control. So right now we have a tie between weak US dollar and weak pound. So anybody's guess as to what's going to happen. So if we, just like euro dollar, we're extending a trend line out. Some of our indicators, like the parabolic SER, is saying bullish. Our stochastic oscillator is saying bearish. And MACD is sort of stuck in the middle. So this is literally finger in the air. So I'm going to say no change for next week. But I also know, and I spent a quarter of my life living in London, I've never seen an economy go up and down so quickly. So my guess is that the UK economy is going to rebound quite quickly. So I'm saying in a month's time, price could go back up to, and again, with continuing US dollar weakness and some positive changes with the pound in the UK, up to about 1.34. And if that's the case, then again, Andrew Bailey and the Bank of England may lower interest rates before Jerome Powell and the US Federal Reserve. So let's say after 90 days, if we extend this trend line out about here. So there's our prediction for 7, 30, and 90 days. Again, this is not trading advice. Let's take a look at dollar yen. Okay, as I said this week, the Bank of Japan did not raise interest rates. They kept it the same. They didn't lower interest rates, but they're finally talking about going into next year and lowering interest rates. So if you look at all the Japanese yen pairs, they are definitely getting a bit stronger. In fact, you can see here that the yen has gotten stronger over the last, 6 weeks. So we will consider that is going to continue. And also, if we take a look at our MACD, when on MT4, when the signal line passes out of the histogram on the upside, above zero, that is definitely a bearish sign. So if we like MACD, we're going to say bearish. Looking at the stochastic oscillator, it's very ragged, which doesn't fill me full of confidence. In fact, it's trying to pretend to be oversold. I've seen these signals before. It's very, very ragged, so it could stay oversold for some time now. So I'm going to consider that, again, with dollar weakness means that dollar yen will fall. So this to me is a much easier call. So I'm thinking about 140 to the dollar next week. And if I look at a month's time, down into the 130 area, and right about, so 90 days from now, it's about when analysts feel the Japanese will really lower interest rates. So in that case, and they've already tapered back on their bond purchasing. So do we want to be really bold and go down to 117? Probably not. I think that's a bit too crazy. Let's say 123. So there's our prediction for dollar yen. Okay, let's move on. Let's go to dollar Swiss. And we can see here some very serious dollar weakness over the last 2 weeks. We had some railroad tracks here. And again, the stochastic oscillator is looking quite ragged. MACD is looking bearish, which is obvious. 0.855. So it actually went lower than we thought. Okay, is it going to go any lower? Let's take a look at the monthly chart. And there's really not much going on the monthly chart. You can see here this big massive wick from 2015. That was when the Swiss National Bank pulled the plug on the peg, and the Swiss franc got really, really strong and actually shut down a couple of brokers. It was that bad. We didn't see it coming. Luckily, I wasn't trading the Swiss franc that day. Anyway, let's go back. So we really don't have any indication from the monthly chart. Let's try and scroll back a bit. No, we can't. There's no more data. So let's go back to the weekly chart. So basically, if we take out of the equation the crash of January 2015, we are at low, 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 low. So is it going to go any lower? Wow. So the American dollar could go lower. Will the Swiss franc get that much stronger? That's a hard one to judge. Typically, when times get tough, the Swiss franc is a safe haven currency. We used to have three safe havens, the Japanese yen, the Swiss franc, and gold. Well, the Japanese yen has not been much of a safe haven the last few years because of, the rest of the world was having inflation, the Japanese were having deflation. The bond yield differential between the Americans and the Japanese is huge, it still is, and the interest rate differential between the Americans and the Japanese is still huge. So it really doesn't give much confidence to people who want to invest in the yen. Maybe the money that would normally go to the yen has gone to the Swiss franc because now we are at 0.85 to the dollar, which is extremely strong on terms of the Swiss franc and weak on the dollar. So, sorry, I'm waffling a bit here because I really don't want to make a prediction that's going to be going any lower. So, because it's Christmas next week, I'm going to be a chicken and sit on the fence and say no change. Will the American dollar get any weaker? Probably. So in a month's time, I'm going to be very conservative about this. Well, in fact, let's try and draw some trend lines here. We can see here we have no wedges. This is a proper channel. So assuming in a month's time, we're going to go lower. And if the Americans at some point lower their interest rate, we may come back a bit. So I'm saying next week 0.85 and a half, in a month's time down to 0.8115, and then coming back up again. Again, please, this is not trading advice. This is simply me looking at fundamental analysis and the technical indicators. Okay, let's carry on with the Australian. Let's get rid of all these. This is from last week, and we got it wrong. Got it really wrong. Okay, if we put this trend line back where I wanted it to be, okay, we can see here that price, what we were thinking was that price is going to hit this trend line and bounce back down because the stochastic oscillator was a bit overbought. Well, got it completely wrong. The American dollar weakness really took over. Let me draw another trend line on here. Let me extend this out. That's not right. So where are we going to go next week? Again, because it's holidays, I'm going to say no change at all. I did say I was going to consider US dollar weakness going in for the next month. So if we find a good point of resistance, which is right, there's a few of them. There's a good point right there, but let's stick with that one. So in a month's time, we'll see price heading up. And then again, if we assume that the Americans will lower interest rates in about 90 days, it's going to go even weaker. Okay, so that's what we're looking at for 7, 30, and 90 days. We need to take a look before the next analysis, which will be in 2 weeks' time. I'll take a look at the Australian dollar and see what's happening there. So we could probably expect the same thing with the Kiwi dollar. And that's what we got. we got price action. I'm not sure if this lower trend line makes any sense. It depends where you want to draw your trend line. But you can see if we extend this back out, no, it doesn't help us. But regardless, we can see the price action broke through this trend line. Same story with the Australian dollar. So let's take the same attitude with the Australian dollar, maybe a little change going into 7 days, 30 days, and 90 days. Again, before the next analysis, we'll take a look at the New Zealand economy and see what's going on, see when the next interest rate rises are, etc. Okay, before I do the Canadian dollar, dollar CAD, I'm going to jump over to WTI. West Texas Intermediate, US oil. So here we are, and we're on the WTI weekly chart. So we've been having basically a bear run for quite a while. Price looked like it was going to come down to hit this line of support, which is about $66, $66.60 a barrel. In fact, we have a wick here. We have a candle, basically a hammer, which is a reversal candle, as you know. And that's exactly what's happened. Price has reversed a little bit. And the stochastic oscillator is telling us that, yeah, it's time for a reversal. Went from oversold and went up into, it's turning back up into normal territory. And we've got one green candle, which meant price of oil went up this week. We've got some flakiness with OPEC. So in theory, I'm going to consider that the price is going to go back down. Next week, not much is going to happen. We may get a little rise from the technical side. So let's say in 30 days, we're back up here. But I really think price of oil is going to continue on down. And don't forget, once we're into 90 days, so that's January, February, March, we're getting into spring. So the price of petrol may come down based on climatic factors. Okay, so this is what I'm looking at for 7 days, about the same, maybe a little lower. 30 days a bit higher into the $70, $80 range, and then back down to the $66, $67 range in 90 days, in 1 quarter. Okay, so the reason I'm looking at oil first, before I do the Canadian dollar, is just that. So if we consider that the price of crude has gone up this week, and let's see if that actually holds true. That should mean the Canadian dollar probably got stronger, and it did. It got quite a bit stronger. But there's 2 factors involved. The Canadian dollar got stronger and the American dollar got weaker. So the fact that price action broke through this lower trend line isn't really surprising. Again, the 2 factors, weaker dollar bringing it down, higher price of oil making the Canadian dollar stronger, bringing price action down. Consider that that's going to happen. I'm going to say that next week with higher price of oil, I did say the price of oil was going to be stable. So let's consider the American dollar weakness a little bit. Price of oil going back up a bit. Then the Americans lowering interest rates. So what I'm saying is in next week, Christmas 1.32 roughly. In a month's time, 1.35 and a bit. And then in 1 quarter, 3 months from now, 1.30-ish. Okay, so that's my look. And if you want to see these, you can log in at, probably Saturday, take a look at the FX Street forecast, and they'll be updated by everybody. And don't be surprised if there are a few missing, because again, it is the holiday. So there's our dollar CAD outlook. Let's go to Euro Yen. Okay, so we talked about 2 things. We talked about the Europeans possibly lowering interest rates, and we also talked about the yen getting stronger. Well, it hasn't happened yet. You can see in this case, Euro Yen actually went up this week because the euro had a bit of strength. But again, we're considering that it's going to be coming back down. So you can see the weekly candle is actually half the candle is is body, the other half is wick. So clearly it tried to go higher, but the market has brought it back down. So we've got two conflicting indicators here. We've got MACD saying that the signal lines come out of the histogram, which is a bearish signal. But we've also got the stochastic oscillator, which is sort of oversold-ish and trying to turn. It doesn't fill me full of confidence that we have a bullish signal. And again, being Christmas and looking at the size of this oddly shaped, looks like a cricket bat actually. So I'm going to consider that not much is going to happen. Lately, the euro is being a bit stronger, so that's 1 month from now. I'll say that it's going to go back up. But again, looking at the possibility of the Japanese raising interest rates and the Europeans lowering interest rates, I'm considering a big fall in 90 days. So I'm thinking getting down to the 150 level in 90 days' time. Okay, let's move on. So we go to pound yen. Let's put a trend line in here somewhere if we can find a place to put it. That's not right. That doesn't look very, very nice at all. Let's try. It's not the prettiest trend line because we have price action breaking through in quite a few spots, but it's parallel to the upper trend line. And again, we've been talking recently about pound weakness and Japanese yen strength. And the candle we have today, I mean, I don't put all my faith in candles and candlestick patterns. I typically look at those as number 5 on the list. But when I see a doji like this, it really indicates that you've got a battle between the pound and the yen, and no one's winning. So here's an easy one. I'm going to say next week, not much is going to change. We'll stick around the 180 mark. Again, I'm considering that the UK economy is going to get worse and the Japanese yen will continue with a bit of strength. So let's say in 30 days' time, we're going to bring it down to 174. So what's going to happen in 90 days' time? I think it's going to be a tie. I did say the UK economy would rebound in 90 days. And we're also talking about the Bank of Japan raising interest rates. So I'm going to consider this to be a tie in 90 days' time, about 174. So that's my story, and right now I'm sticking to it. Okay, euro pound. So we've had a painfully easy to see a ranging market. You can see almost every week the candles alternate in color. Even the last few weeks, we've had bullish indications on green candles, but they've been quite small. Only recently, this last week, has the euro really outweighed the pound, which is obvious. Okay, we have now a couple of bullish indications. We have the stochastic oscillator turning over, and we have MACD sort of trying to look bullish. Hard to say. Again, being Christmas. So what are we considering? We're considering that the euro will strengthen a bit, and as we've said many times, the pound will get weaker. But because it's Christmas next week, we'll give it a bit, and we'll give it a bit more for next month. But in 90 days, again, I'm going to stick to my guns. I'm going to say the Europeans will lower interest rates, and the pound will get stronger. So in 90 days, we could be looking at around 0.85. So that's my analysis for the next 7, 30, and 90 days. And finally, let's take a look at gold. Okay, gold rose again, more based on the American dollar weakness, and price went from last week about 2019 up to 2060. So it was quite a jump. So where are we now? Obviously, we have some geopolitical events going on. There's talk of the Americans not being able to fund the Ukrainians, which is definitely not good news. We still have massive destruction going on in in Gaza, I should say, sorry. So I'm going to consider that the American dollar will continue getting weaker. Gold will still go higher. And typically geopolitical events do not take time off for Christmas. So I'm going to consider that the price of gold will continue up to about this line, almost to the record levels that it was earlier, about 2080. Okay, and hopefully, this is fingers crossed optimistic, in 30 days, things calming down to 2011, and then down even further. Let's say down in 90 days to 1836. Okay, again, this is not trading advice. This is simply a bunch of analysts getting it wrong, obviously. And again, lately I've been getting 80% right. This week was not my best. So that's it. So have a good holiday. We'll see you in 2 weeks' time for our next 7:30 90-day analyst. Take care. Bye-bye.